Hey, this is Warren Redlick. We're going to review both the slide deck and the Tesla earnings call that we just had. And I want to emphasize this. I'm going to focus on the long term. I'm going to focus on what this means for 2030 and beyond. I'm not going to focus on short term. What is this going to do for Tesla in Q1 2024? What does this mean for 2024? I may mention that here and there, but I am not a short-term focused guy. I'm a long-term focused guy. And I think we learned a lot in this call that will help us understand the long term. If you are looking at selling your stock next week or next month, then this probably isn't going to be that helpful to you. If you are the kind of person who's holding your stock thinking you're going to sell in 2030 or beyond, then I think what I'm about to go through is important. I'm going to focus at first on the earnings call itself rather than on the slide deck, because I think what happened in the earnings call was more important, and we'll talk about the slide deck as we go along.
We achieved record production and deliveries of over 1.8 million vehicles, in line with our official guidance. And in Q4, we're producing vehicles at an annualized run rate of almost 2 million cars a year.
Those numbers are not terribly shocking to any of us. We already knew the 1.8 million vehicle number. The approaching 2 million vehicle run rate is about what we expect. Hopefully they're going to ramp a little bit more, and we're going to see 2.1, 2.2 million vehicles in 2024. But again, that's a short-term thing, not terribly important from my perspective.
Looking at just the Fremont factory alone, we made 560,000 cars. This is a record. In fact, it's the highest output of automotive plant in North America.
Just a little perspective on that. On the slide deck, page 7, I think it is, they lay out the annual vehicle capacity. You can see for Fremont, it's 100,000 of Model S and X and 550,000 of Model 3 and Y. Now, Model S and X, I think the total production was around 50,000. So they're getting pretty close to production capacity for Models 3 and Y, and my hunch is they can go over. And if you think about that plus Model 3 and Y in Shanghai hitting potentially 1 million units, Model Y in Berlin hitting potentially 300,000 units, and Texas going over 200,000 plus, you can see where we can get to 2.1, 2.2 million vehicles. Again, that's a short-term focus I'm not really that focused on, but just to give you that background.
And it's enriched the community in so many different ways. It's really a gem.
Yeah, I just want to add here, Fremont at 560,000, Giga Texas is a much bigger factory. The potential for Giga Texas to manufacture in much higher volume than Fremont is there. Giga Texas should be producing 1 to 2 million vehicles a year at some point. So, what's the holdup? I think, we've sort of reached asymptotically the demand for Model Y. Cybertruck is ramping. The next generation vehicle is coming. So we're going to see a high volume of production out of Giga Texas, but not yet. So there is room for growth in North America. Fremont may be close to maxed out, but you could easily see Giga Texas producing 1 million vehicles a year, maybe even 2 million vehicles a year. So there's a lot of potential for growth in North America just with the buildings that we know about. And of course, Tesla can build more structures at Texas and maybe elsewhere.
Model Y became the best-selling vehicle globally, as predicted. The best-selling vehicle of any kind, not just electric vehicles, with over 1.2 million units delivered. The energy storage business delivered nearly 15 gigawatt hours of batteries in 2023 compared to 6.5 gigawatt hours the year before. Tremendous year-over-year growth.
I did not think that the energy storage numbers were that great. Not that they were terrible, that they were not that great. So if you look at the operational summary here, what you'll see is that storage deployed actually fell in Q4 from the lowest number since Q4 of 2022. So storage deployed actually declined in the fourth quarter. When you add the 4 quarters up, you'll see that they had a good number for the year on storage deployed. They went from 6.5 gigawatt hours to 14.7 gigawatt hours. But on a quarterly basis, this is kind of a disappointment to see storage deployed down to 3.2 gigawatt hours. Now, Drew Baglino in the earnings call later says that they expect to double capacity at Fremont, at Lathrop, at the Lathrop Megapack factory, from 20 gigawatt hours to 40 gigawatt hours. So you can see them scaling potentially to double this number. You've got a number here of, let me go to the other number, sorry. You've got a number here for the year of 14.7 gigawatt hours. So it's not crazy to say we might hit 30 gigawatt hours in 2024, but will we? If we're going to go from a run rate of, 3.2 gigawatt hours, maybe 4 gigawatt hours in order to get to 30 gigawatt hours, we need to have an average of 7.5 gigawatt hours a quarter. So is that coming? When is that coming? What's the holdup? No analyst really asked that question. I didn't hear an analyst ask that question of what's going to get this number to 7.5 gigawatt hours or higher. Production, is it production constrained? Is it demand constrained? We didn't really get an answer. My impression is they're not demand constrained, they're supply constrained or production constrained. And as they produce more megapacks, and there's also sort of when does the project recognize the revenue? Sometimes they're doing a large project, they don't really recognize the storage deployed or recognize the revenue until a certain event is triggered. So they may have actually delivered more in Q4, but it wasn't recognized because of some accounting issues. And then, Q1 will end up being a much larger number. So we'll see what happens in Q1. But, energy for me is not knocking my socks off. And I will say this, that when you're looking at these numbers, let me go to the annual numbers here. When you're looking at the annual numbers for operational summary and you see 14.7 gigawatt hours, and let's say we go to 30 gigawatt hours next year. Well, what's the target for 2030? So next year would be 2024, or this year, 2024. If we hit, say, 30 gigawatt hours, well, what's the target for 2030? The target for 2030, as I understand it, is 1,000 gigawatt hours. So that's like a 33x from where we might be in 2024. So how do we get from where we are to a terawatt hour in 2024 and 2030? And I think it's a stretch. I think this is my criticism. If I have a criticism is, we did 1.8 million, 1.84 million vehicles produced in 2023. And maybe we're going to do 2.1, 2.3 million vehicles in 2024. How are we getting to 20 million vehicles? This is my big issue with the earnings call, looking forward to 2030. The targets have been 20 million vehicles in 2030 and 1 terawatt hour. I think it was even more before, but 1 terawatt hour of energy storage devices deployed in 2030. And it's like, all right, so you've got Lathrop doing 40 gigawatt hours at some point. You've got Shanghai building a Megapack factory, and maybe that'll scale to 40 gigawatt hours. That's 80 gigawatt hours capacity. So you need 10x that, plus you need 12x that or 13x that in order to be able to manufacture a terawatt hour of energy storage devices. We don't have an announcement of other Megapack factories. Maybe there's some massive amount of growth coming. And I've had this view that Tesla's this coiled spring where the negative forces are pushing down, the macro, the FUD, the politics, and the media and all this stuff pushing the spring down. And there's all this innovation and growth happening inside Tesla pushing up. And at some point, this explodes and the spring is unleashed and Tesla stock, goes to the moon, so to speak. So, is there some level of innovation in Megapack production that's going to be unleashed and we're going to see all of a sudden an announcement of 10 Megapack factories? Maybe. We're going to talk about next-gen vehicles soon. Is the next-gen vehicle going to produce in sufficient volume to get us to 20 million vehicles? I don't think so. Is there something coming that will get us to 20 million vehicles? I don't think so. Is it that the Robotaxi network goes live and the demand for Robotaxis for vehicles goes straight into the Robotaxi network? We don't know the answer to that. We don't have the answer to that. The questions weren't asked in the earnings call. But let's dive back into the earnings call.
I think we'll continue to see very strong growth in storage as predicted. I said for many years that the storage business would grow much faster than the car business, and it is doing that. Free cash flow remains strong at $4.4 billion in 2023 in spite of record spending on future projects.
So a couple of things there. First of all, the energy storage business growing faster and becoming larger than the vehicle business. Let's look at the financial summary. What we've got is total automotive revenue is 82 billion and total energy revenue is 6 billion. So, you've got assuming that auto revenue doesn't grow, you've got a 12x Megapack or energy storage revenue. Energy revenue has to 12x. To get bigger, assuming that vehicle revenue is going to grow, vehicle revenue should grow to, let's say, $200 billion. So you have to get, basically like a 40x in energy revenue. I'm not saying it's not going to happen. It's just like I don't think they've laid out the path. I am optimistic that Tesla is. I just want to be clear. I think Tesla's stock is going to 10x or more by 2030, primarily driven by self-driving Robotaxi and Optimus. my battery revenue model approach to valuing Tesla seems to be faltering because I just don't see Tesla producing, like there may be this growth wave coming. They've talked about a second growth wave. Maybe there's some sort of second growth wave coming that's really going to radically increase production of Megapacks and vehicles, and I just don't see it yet. Maybe it's coming, but it's really hard to see that path. It's easy to see the revenue and profit path for me, and for a lot of other people. It's easy to see the Robotaxi insane valuation coming, the Tesla bot insane valuation coming. But it's hard to see the battery revenue model really taking off the way they've talked about it in the past when we're just not seeing the growth now. Where I can understand the vehicle wave of growth is being held back by development of the next generation vehicle platform, which is taking longer than I thought, and we'll come to that. But I don't see what's holding back energy storage. It seems like energy storage is profitable. It seems like they should be building more Megapack factories. It seems like that should be ramping more. Are they waiting to improve Megapack manufacturing? Are they waiting for some sort of reduction in the cost of lithium iron phosphate batteries? Is there something that's holding them back from growing? And we know solar is being held back by high interest rates, discouraging people from installing solar. But I don't think that's the big driver of Tesla's future. And I think the Megapack is a compelling story with interest rates where they are now. So it's not clear what's holding everything back. And how do we get that growth? Maybe 2032 we get there, and I'm fine with that. But 2030, the numbers that they've been talked about, I don't see it. I don't think they're talking about those numbers anymore. They talked about it less than 2 years ago, but I think those numbers, I mean, even Investor Day and the Master Plan 3 was talking about a terawatt hour of energy storage in 2030. And we're not that long after Investor Day, and I don't see it. So again, I'm still bullish, but on this particular point, I don't think they're delivering on what we anticipated, and I don't see it happening in the time frame they've talked about. And I think it's at least a 2-year delay.
Record capex expenses as well as record R&D.
And sorry, I wanted to add, Elon mentioned cash flow. The cash pile hit $29 billion in cash. This is a big jump. The cash pile went from 22 billion to 29 billion. That's a pretty big jump in the cash pile, right? Their free cash flow was like $4.3 billion, what was the free cash flow? I don't think that's on here. Your free cash flow was $4.3 billion, but somehow they went up to $29 billion in cash. So what does Tesla do with all that cash? It's interesting, and I was actually surprised that no analyst asked that question. What are you going to do with all the cash? You got this big cash pile. That's a really notable jump in the cash pile. That's a positive thing for the business. It's a positive thing for surviving a recession if a recession's coming. Just in a conversation, somebody saying, hey, there's a lot of layoffs in Silicon Valley. They're hearing about a lot of layoffs on Wall Street. That's going to affect consumption. That's going to affect demand. I don't know. Are Silicon Valley layoffs an indicator for the whole economy? Are Wall Street layoffs an indicator for the whole economy? I'm not so sure. I don't know enough to say that, but yeah. So cash pile's good. I think if you're a short termer, seeing that large cash pile is a real big positive, and I didn't see a lot of people talking about that.
This brings us to 2024. There's a lot to look forward to in 2024. Tesla is currently between two major growth waves. We're focused on making sure that our next growth wave, driven by next-gen vehicle, energy storage, full self-driving, and other projects, is executed as well as possible. For full self-driving, we've released version 12, which is a complete architectural rewrite compared to prior versions. This is end-to-end artificial intelligence. So another bit nets, basically photons in and controls out. It really is quite a profound difference.
So Elon has talked about FSD being, this change in FSD being a profound difference. I think he's said things like that before. Now, I see why version 12 is genuinely a profound difference from previous versions, from a nerd perspective, from somebody who thinks he understands AI but doesn't really. I understand it on a surface level. I don't understand it deep. I think the path from here to genuine full self-driving and robotaxi is more data, more compute. I don't know that there's anything else in the way. I don't know that there's a need for a version 13. There's probably a version 13 coming. There's probably going to be some other innovations, but it may be that version 12 is the one that takes us to the promised land. That is the question. I don't know the answer. I don't think early drives, Omar's been driving FSD version 12.1.2, and, he's having his experience. Is that, I don't think the first versions, the big thing about version 12 is it should improve FSD faster and in bigger jumps. It should learn faster, it should learn better, it should have a more general understanding of what it's seeing, but we'll find that out. We don't know that yet. I'm very optimistic about it, but I'm always optimistic, and I think you got to take my optimism with a grain of salt.
This is the first time AI is being used not just for object perception, but for path planning and vehicle controls. We replaced 330,000 lines of C++ code with neural nets. So as a side note, I think Tesla is probably the most efficient company in the world for AI inference.
Okay, I want to explain what he just said there, AI inference. So Tesla has two different things going on with computing power related to AI. There is training supercomputer clusters at the headquarters that are used for training the inference computers. The computers in the cars are inference computers. So the inference computers, basically photons come into the car, the inference computers follow their training, and that tells the controls of the car what to do. And there are 5+ million Teslas out there with FSD hardware in them with inference compute. And so Elon is saying we lead the world in inference computing power. And he's going to guide into why that's important. But just to be clear, the inference computing power is the computing power in the cars themselves. And there are periods of time when those computers are not doing anything else, and they might be available to be used for something else, and they may be looking at that. But he's not talking about Dojo. He's not talking about the NVIDIA clusters in Palo Alto, California. He's talking about the chips in the cars when he talks about inference compute.
Out of necessity, we've actually had to be extremely good at getting the most out of hardware, because hardware 3 at this point is several years old. So I think we're quite far ahead of any other company in the world in terms of AI inference efficiency, which is going to be a very important metric in the future in many arenas.
So in a sense, it's going to be a very important metric in the future in many arenas. So he sees some use, and I think he's going to get more into this. He sees some use for these chips in our cars beyond driving the cars in many arenas. I don't claim to have the answer to what he's talking about. I mean, he's going to drop a hint in a second, but I think there may be more.
See, the new Model 3 is now available globally. So we did an updated Model 3.
Sorry, he didn't hit that there. You know, the idea is that maybe when you're using ChatGPT, you're not going to the training computer at OpenAI. You're going to some other computer that's been trained how to respond to your queries. So if you have Grok from XAI, which is the sort of a loose equivalent of ChatGPT, and you have that running in the car, you may be able to ask your car questions. But not only that, but if you build a cloud computing system to answer people's questions where Grok is powered by inference compute, you can use the computers in the cars when they're not driving to provide answers to questions that are being queried to the AI. So is the idea that your car, when it's sitting in the garage on Wi-Fi, charging and not being driven, is going to be helping support some sort of cloud computing chatbot like ChatGPT, but maybe it's Grok? Are there other applications for this that we haven't thought of yet? You know, I think it sounds like there's a lot of different applications for that. And those computers are sitting in the cars 16 to 20 hours a day doing nothing. So if that computing resource is available, if it's very efficient, so it doesn't use a lot of energy, it's available, the chip's already there, there's a shortage of computing power, that might be valuable. And, you know, does that value go to the owner of the car? Are we going to get compensated for the use of our chips in providing AI compute? Is Tesla just going to be able to monetize that and we don't even know it's happening? Does that add value to the company as a shareholder? I'm not sure.
While the car looks similar, a lot of work has gone into the vehicle to make it better in every way. It is significantly quieter, more refined, better equipped, has longer range, and many other improvements. And I recommend taking it for a test drive. If you have not driven a Model 3 in a long time, you should really try the new one.
So I haven't driven the new Model 3. I've been in the new Model 3. I've seen the new Model 3. It looks nice. My understanding is it is quieter, has a lot of advantages over the existing Model 3. I don't expect this to be a big driver of growth for Tesla. You know, if it's not so spectacular that Tesla decided to add a manufacturing line in Berlin, Germany, it's not so spectacular that Tesla decided to add a manufacturing line in Texas. They're manufacturing Model 3 in Fremont, California. They're manufacturing Model 3 in Shanghai. They're not building new factories for it. It's not going to drive massive new sales. It may shore up sales of Model 3 so they sell more units than they would have without the upgrade. It might increase revenue per vehicle and maybe margins a little bit. I'm not sure about that, but I don't think that this is a game changer for the company. It's just a small positive, and short-term small positive. It's not particularly meaningful long-term.
And we're very far along on our next generation low-cost vehicle. This is an earnings call, not a product announcement. So there'll no doubt be many questions that try to ask us about new products coming, but we reserve product announcements for product announcements, not earning calls. So, but we're very excited about this, and this is really going to be profound, not just in its design of the vehicle itself, but in the design of the manufacturing system. This is a revolutionary manufacturing system, significant, far more advanced than any other automotive manufacturing system in the world, like by a significant margin. Several years ago, I said that perhaps the most important competitive characteristic of Tesla in the future will be manufacturing technology. And you will really see that come to bear with our next-gen vehicle. The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America.
So I think he says it later in the call, but he says at some point, or Tesla says at some point, that the next generation vehicles manufacturing will start late 2025. This, to me, was a short to medium term disappointment. And then what did he just say now? They're going to start in Texas, then number 2 will be Giga Mexico, and then they'll think about a third place to locate next gen manufacturing. Now, they filed for permits in Berlin to make 500,000 new units. I don't think those are going to be Model Y. I don't think there's going to be new Model 3. It's certainly not anywhere that I've seen that they're planning on making Model 3. I don't think there's enough market to make another 500,000 Model Ys in Europe. So it would seem like Berlin is a natural place to locate the next generation vehicle production. If you've already filed for permits to produce 500,000 vehicles, what else are you producing there? Shanghai, it's obvious that that's a market where you want to produce this vehicle. So surprising he didn't name Shanghai. I'm a little surprised that it sounds like the plans for the next generation vehicle are not taking off very fast. When they talk about we're in between growth waves in terms of vehicle deliveries and vehicle production, we were in a growth wave. We're now in a lull between growth waves. And the next growth wave is supposed to be fueled by the next generation vehicle. But if they're not going to start manufacturing until the fall of 2025, the second half of 2025, they're not really going to start delivering cars until 2026. They're not going to start manufacturing a second factory until probably 2026 and a third factory in 2026 or 2027. You start to ask yourself the question, how do you get to 20 million vehicles a year in 2030 if your highest volume vehicle doesn't start manufacturing in significant volumes until 2027? And you need to get to 20 million vehicles. The next gen vehicle, what's it going to sell? 8 million vehicles a year? This is my biggest struggle. When I talk about the battery revenue model, I anticipate Tesla making 20 million vehicles with, let's say, 50 kilowatt hour packs each on average. And then Megapacks with the terawatt hour. So you got 2 terawatt hours, and then you've got dollars per kilowatt hour, and you can see where you're getting to these really high revenue numbers. That takes Tesla from a $700 billion company to a $5 trillion company, let's say. That path was pretty clear, and now that path is not so clear. Maybe it's 2032 that we get there, but it doesn't look like we're getting there unless there's something coming that they're not telling us. It just seems like that unless they're massively sandbagging, it just seems like the path to 2030 is not what we thought. It doesn't look like they're getting there on that. Now, again, FSD, Robotaxi profits are outsized potential. Tesla bot profits are outsized potential. Those things really are game changers for valuation and lead to a 10x, 25x, 50x of Tesla stock, if not more, when you add it all together. So I'm still very bullish on the long-term value of the company, but in the short to medium term, it's hard to value, for a lot of people to value a Robotaxi without actually having one on the road making money. It's hard to value a bot without actually having units in the field making money. I can see it. I might be wrong, but I can see it. But the people who are driving most of the investing decisions on Wall Street and other places and retail investors, if they don't see it, they don't see it. And so that doesn't translate to an increase in stock value in the short to medium term. Get out to 2030, if all these things happen, okay, it's all there. But, it's going to, I think we're in a long flat period in Tesla stock before we see a rise. And, I think something has to happen that's going to cause the spring to uncoil. My best guess is that Robotaxi goes live in 2024 or 2025, or something happens with Optimus. That Optimus starts getting delivered, and we'll hear more about that soon. And that might uncork the bottle. But I'm mixing metaphors.
If we execute on all these things, and it is very hard to do all these things, it's not a sure thing, but I do see a path where Tesla could one day be the most valuable company in the world. I do emphasize that is not an easy path, and a very difficult one, but it is now in the set of possible outcomes. And previously, I would not have thought it is in the set of possible outcomes.
So that's one of the moments when Elon says something that's like, well, you said that before. It's now in this. Elon has been saying for probably a year that he thinks Tesla will be more valuable than the most valuable company in the world, or more valuable than Apple and the Saudi investment fund. So it's not, I don't know what he means by previously he wouldn't have said that. Previously he has said that. So, and I still believe it, and I still believe he's correct, and I still think he's underselling it. I still think it's going to be 10x the value of those companies down the road. But, Warren the perpetual optimist.
In our vehicle business, we continue to see improvements in our per unit cost, despite us being in the early phase of Cybertruck ramp. As a result, our auto gross margin improved sequentially. That said, predicting auto gross margins is extremely challenging, since there are many moving parts to this equation, some of which are out of our control, like the change in tariffs or local incentives, to name a few. While the teams are focused on cost reductions, we are approaching the limits within our current platforms.
I think that's an important point. People are looking for Tesla to reduce costs, and he said we're approaching the limits of our cost reduction ability. They're trying to reduce costs, and on the current vehicle platforms, on the 3/Y platform primarily, they have found about as much cost reduction as they can. They're still going to fight for every penny that they can save here, there, wherever, but they've kind of hit the limit of how much cost that can be saved, and there's not going to be that much more gain in cost reduction. Now, there may be some reduction in commodity prices, there may be some other advantages. As Cybertruck ramps, the cost of producing Cybertruck per unit will come down. But yeah, you're just not that side of the business. Again, that's a short to medium term thing. When the next gen vehicle comes along, you're going to see massive cost reduction on the production of a vehicle. And if they take that manufacturing approach and they spin that back into 3/Y and S and X, then that should reduce manufacturing costs for those vehicles as well, and that can help. And that brings their price down and makes them able to sell more. But that those changes, like a new 3/Y or a new S and X, that seems like years away. Because if we're not going to start delivering next gen vehicles until 2026, it sounds like, or start manufacturing next gen vehicles till late 2025, when do we start manufacturing the new, a legitimately new 3/Y or a legitimately new S or X? Maybe it's underway and we don't know about it. Nothing about Roadster. Roadster's on the capacity chart is still to be decided. So there's a long haul there. And Roadster's not a significant volume vehicle anyway.
As promised, we made investments in digital campaigns in 2023. We fully appreciate the importance of customer education, as we are still in the customer acquisition phase. Our data suggests that around 90% of our vehicle buyers in 2023 never owned a Tesla before. We are being creative in figuring out ways to bring in new customers and educate them about the benefits of owning a Tesla versus gas-powered vehicles. The key among them being total cost of ownership. This concept is mostly overlooked for just the upfront cost. We will be rigorous in evaluating our campaigns, curating the content, and optimizing spend accordingly to support the overall demand.
So just real quick on the advertising front, he mentioned that they are doing digital advertising. They're doing a variety of campaigns. They're seeing the results. I think we're going to hear a little bit more about that later in the call. They're looking into it. And for those who think, advertising is the game changer, obviously, if they were seeing results that made it a game changer, they'd spend a lot more money. And if they're not spending a lot more money on it, means the results they're seeing might be positive, but not game changing.
Another record year with deployments more than doubling and revenues increasing by more than 50%. This business is poised to again surpass our auto business in terms of growth rate in 2024. This has been in the works for quite some time, with us laying the foundation a few years back by building our mega factory in Lathrop.
Energy storage doubled, but revenue increased 50%. So revenue per gigawatt hour is down. That's not that big of a surprise. I think that there's going to be a limit to how low that's going to go, although we'll see. And then he said that energy is going to increase faster than vehicles, but vehicles aren't increasing particularly fast in 2024. So kind of a mixed message there. How much is energy going to grow? Is energy going to continue to grow at 100 to 150% a year? I think it was 125% year on year. Or is energy growth actually going to slow? Not clear.
Services and others business also started contributing meaningfully to our results and our fleets as our fleet goes, as we expect the fleet-based revenues from supercharging, used cars, and services to continue to increase.
So this services and other revenue is actually larger than energy revenue. It's like $8.3 billion for the year. It's way significantly less than 10% of revenue. It's not bad. It might be high margin. It's not really clear. I don't think supercharging is the big chunk of it. It apparently has a lot to do with parts, and service are like maybe larger shares of the revenue. Doesn't hurt, but you're starting to talk more like a normal car company if you're expecting your results to be driven by parts and service as opposed to, hey, we got really cool new stuff we're selling. So I was not motivated by this. It doesn't hurt. Like, of course you want to make money at it, but that's not the big game changer that we're looking for from Tesla.
For 2024, our focus is to continue growing our output, continuing our cost reduction efforts, and increasing investments in our future growth initiatives. Accordingly, we are currently expecting our capital expenditure for 2024 to be in excess of $10 billion.
So this is the big nut, right? If you're going to get the growth that you want, you need to invest in the growth. And they are investing a lot in the growth. And I think something that's undersold, that insiders, those of us who follow closely get it, their CapEx spending is really efficient. But at some level, I want to see them say, we got a $29 billion cash pile, and some people want them to do a share buyback. It's like, well, no, why aren't you building 3 Megapack factories? Maybe the battery supply isn't there for it. Maybe the demand isn't there for it. I don't know. But why aren't you building 3 more Megapack factories? It seems like demand for Megapack is off the charts, so build more of them. Again, there's reasons. There's engineering reasons. There's management reasons. There's other reasons why they're not doing it, but I would love to see that. Why not build the next generation? I think for the next generation vehicle, they have to get it right, so they can't scale that up. So it's tough to do it in the vehicle sector. Yeah, I mean, I know there's limited resources. Like, is there a Wolverine Cybertruck coming that they could sell in Southeast Asia and Europe? I don't know. There's all this stuff, like when you have that capital, how can you deploy that capital still efficiently, but to really increase your growth? And so far it looks like they're not doing that much of that. Could you pump it into Dojo? Could you pump it into buying more NVIDIA supercomputing clusters? And I think it's sort of like they're limited in what they can deploy. But, I see like growth is constrained to some extent by Tesla's ability to deploy sufficient capital to get the growth that you want. I still have faith, and I still see like, FSD is going to be this big driver, and Optimus is going to be this big driver, and we're seeing a lot of positive movement here. But that's some challenges.
I believe this would be critical in helping us lay the foundation for the next phase of growth.
Thank you. Let's go through investor questions. Question number 1 is from Michael. Given that you moved the start of the next generation compact vehicle production to Austin, has the timeline improved so that we might see the next generation platform vehicles in 2025?
Great question. By the way, it seems like Michael got all. I think Michael must have been the first guy to submit questions and got a lot of votes on his questions. But I think they were largely good questions. And I think this is a great question. And we're going to get a good answer.
I want to certainly say things with that should be taken with a grain of salt. Since I'm often optimistic with, I don't want to blow your minds, but I'm often optimistic regarding time. But our current schedule says that we will start production towards the end of 2025.
So to me, that was almost heartbreaking. They've been working on the manufacturing line in Giga Texas since the summer of 2023, and they don't expect to start production until late 2025. And this is the second growth wave within vehicles. And if you're not going to start production till late 2025, you're not going to start deliveries until 2026. And if you're going to start production in Texas in late 2025, and then once you get production going in Texas, you're going to start production in Giga Mexico, and then you're going to look for a third place. Like, when do you have 3 or 4 factories running making next generation vehicles? It's 2027. Maybe not till 2028. So this plan to get to 20 million vehicles, you're starting to make 10 million vehicles look hard in 2030. I'm not saying you don't get there, but it's starting to look really challenging to see the growth that we've talked about. And you go out, if you're willing to extend 2030 to 2032, a lot more things become possible. But this was, for me, like one of the roughest moments of the call. They're not going to start manufacturing next generation vehicle on what's basically a pilot line in Texas, as far as we know, until late 2025. Not late 2024, late 2025. We're in the beginning of 2024 now. So we're basically 2 years away from the start of manufacturing of the next gen vehicle. So, this growth pause that we're in is a long pause, right? Because we dropped to like 40% vehicle delivery growth and revenue growth even smaller than that in 2023. We're probably dropping to 20% vehicle delivery growth and maybe no or minimal revenue growth in 2024. 2025 is not going to be a lot better. I mean, like Cybertruck's going to grow a little bit, but we're not looking at a lot of growth in the next 2-3 years. This is, when do we get to this big growth wave? That I didn't really find a satisfactory answer to that. I mean, the answer is not yet. And that means the stocks, if you're looking at the stock, like, well, I wouldn't expect a big jump in the stock based on vehicle production anytime soon. FSD could cross the threshold any day. I have a friend who's telling me, no, FSD is not crossing the threshold for 3 years. I don't know how he knows that. I don't think he can know that. I think it's unknowable. I think it may very well be that version 12 takes us across the line. It may be that we get a new version of the software and we still cross the line in 2024. Something has to unlock the massive growth in profits, and FSD or bot seem to be the only candidates to do that, because vehicle manufacturing and energy storage manufacturing don't seem to be on that path, at least not yet.
That's just what our current schedule says. There's a lot of new technology, like a tremendous amount of new revolutionary manufacturing technology here. The reason I want to put this new revolutionary manufacturing line at Giga Texas was because we really need the engineers to be living on the line. This is not sort of a off the shelf, just works type of thing. It's just a lot easier for Tesla engineering to live on the line if it's in Austin versus elsewhere. But we are currently expecting to start production second half next year. That will be a challenging production ramp. Like, as I can't emphasize, we'll be sleeping on the line practically. In fact, not practically, we will be.
That's another point. Number one, keep in mind this is Elon's optimistic timeline, as they're going to start manufacturing in the second half of 2025, late 2025. Does that mean manufacturing doesn't really start until 2026? And then this statement that ramping the next generation vehicle is going to be challenging is, I think, different from the last earnings call when they said it wouldn't be as challenging as the Cybertruck. They were like, oh no, Cybertruck is really hard. The next gen vehicle is more utilitarian. It's more straightforward. Blah, blah, blah. Okay, all of a sudden that's not the same. This seems, maybe they're sandbagging. Maybe they're being overly cautious. Maybe this stuff's going to happen a lot faster than we think. But it just sounds like, wow, they're biting off a lot in order to be able to get this next generation vehicle going. I hope the payoff is there. If they're doing all this to produce a $25,000 Toyota Corolla equivalent or a $25,000 Mini RAV4 equivalent, Honda CR-V equivalent, is that really that compelling? I don't know. Does that sell in high volumes around the world? I don't know. What is going to be in this thing? We don't really know. So as a shareholder, you're sort of like, well, I don't see the growth yet. I don't think they're obligated to sell us the growth. I think, like I said, I think the profit story comes from FSD and Robotaxi and bot. But from a vehicle perspective, like you're not selling me on we're changing the world with we've got this really cool manufacturing system and you're going to find out more about it in 2026. Like when? and I understand that they don't want to reveal their manufacturing process to others because then they face more competition, but this has taken a while to get us there.
I am confident that once it is going, it will be head and shoulders above any other manufacturing technology that exists anywhere in the world.
So when you say that, like it's head and shoulder, okay, but does that mean you're getting the manufacturing cost down sufficiently that, like if they're able to sell this car for under 20 grand, like I've thought before, then that's more of a game changer. I've heard people say that it might be $25,000 to $29,000. If it's $29,000 for a Toyota Corolla or Honda CR-V equivalent, you're just not changing the world. You're not selling 10 million units. You might not sell 5 million units. There's a lot that has to happen for this to achieve the growth that we need. And I'm very confident that they will get there. I just, what they're telling us is not giving us enough to see vehicle growth. Again, the long-term story is Robotaxi and bot. That story hasn't changed, but this is tight.
It's always difficult to predict what that S-curve of manufacturing looks like. So it always starts off real slow, and then it grows exponentially. And predicting that intermediate S-curve is difficult, but, so I don't know. It's hard to say what the unit volume would be next year. We're not going to make any predictions on that front, but it does seem quite likely that we'll start production next year.
So he's not even predicting unit volume for next year, which is fine. But if he's optimistic, then if he's over optimistic, then we're not even going to see any unit volume in 2025. We're not going to see significant unit volume until 2026. And you can see how that's pushing off the growth. That growth wave is no longer like a lull in 2023 and 2024. Now the growth wave lull is in 2025. And even when you're ramping in 2026, you're only ramping one factory in Texas, and it might be a slow ramp. So you don't really get to your significant growth until 2027 at best. I'm fighting for you, Elon. I want to believe, but that story is not selling on vehicle growth. I'm still with you on FSD. I'm still with you on bot. The vehicle growth story, the battery revenue story is near death. It's not as dead as legacy auto and the internal combustion engine industry, but the story of reaching 20 million vehicles and a terawatt hour of battery storage devices in 2030 seems like it's near death unless you've got some like insane manufacturing revolution coming that is really tough to wrap our heads around.
The next question is from Michael again. What has been the barrier to ramping 4680 cells into multi-million cells per week rate, and when do you expect to get there?
So 4680 question, great question. I think we get a really solid answer here from Drew.
First, I just want to allay any concerns regarding 4680 limiting the Cybertruck ramp, because I've seen some people commenting about that. To date, 4680 production is ahead of the ramp with actually weeks of finished cell inventory. And the goal is to keep it that way, not only for Cyber, but for our future vehicle programs. And as Elon said, it is an S-curve here too. Like it's hard to predict these things, but I'm just describing our goals.
So 4680 for our future vehicle programs. So this was a little hint, probably an unintentional hint, that 4680 is going to play into future vehicle programs. Now, the next gen vehicle is supposed to be lithium iron phosphate. And I don't think the 4680 he's talking about is lithium iron phosphate. So what the hell are the future vehicle programs? Because it's beyond Cybertruck. What the hell are these future vehicle programs? So this is where the growth comes back, right? This is where all of a sudden, wait a minute. You're going to make how many gigawatt hours of 4680 batteries, and they're going into future vehicle programs. We know Semi probably can't absorb that many of the batteries. What? Drew, you're teasing me here. You're killing me here. Is the 4680 going into the next generation vehicle? I don't think so, but it's possible. Is the 4680 going to go into like a totally revised Model 3 and Y? Is there a van coming? Because we know there's a van coming at some point. Okay, there's something going on there. That was a nice little tease. That's like sort of that curveball that like, wait, what is that? What did he just leave hanging out there? I don't know what we do with that.
It's a hard problem. Like,
Yeah.
there are entire companies where all they do is make battery cells. That's like.
This is one of those annoying moments when Drew is talking and we want to hear Drew talk and Elon cuts him off and starts talking over him like, Elon, let Drew talk. Come on, man, let Drew talk. And he cut, like, I don't know what more Drew was going to have to say, but we didn't hear it because Elon interrupted him.
Indeed, indeed.
We do a lot of other things, and we got a lot of breakthrough technologies that take time to figure out with 46. It's not just that it's a 46 millimeter diameter by 80 millimeter full cell. That's just the diameter. That's just the dimensions. There's a tremendous amount of new technology in the cell itself.
And manufacturing technology.
Yes, exactly.
And just regarding what the team was able to do in Q4, Texas successfully swapped line 1 from the Model Y design of the cell to the Cybertruck design of the cell, which was the 10% cell energy increase I've mentioned before. And as with any major new product introduction, the factory and engineering teams collaborated to ensure quality of the new design and the process changes as their first priority. And now our focus returns to cost and production ramp in Q1.
Now, what he didn't say, and he had said before, was that they were going to be opening a second line and then 2 more lines. And it sounds like they haven't converted the second line. They haven't started the second line making Cybercell, and they haven't really started the third and fourth line making Cybercell. And then there's 4 more lines coming later, and then Giga Nevada's coming later. But like, if they're already ahead of the demand from Cybertruck for cells and they have cells piling up, I can understand we don't need to start the second line yet. But, I thought we might have the second line running already, and now we don't.
We're currently running 1 production line, 1 assembly line, using 2 assembly lines in addition for yield and rate improvement trials. And we have a 4th in commissioning, and 4 more will be installed starting in Q3 this year. So definitely this is a big year for ramping 4680.
So key detail there is a second and third assembly line that are using to test new technologies to increase yield, which means more good cells, fewer bad cells produced, and other efficiencies. So they're working and they're using the second and third lines to figure out how do we make these things better. And there's a 4th line being commissioned. So they're ready. Sounds like they're pretty much ready to ramp manufacturing of Cybercell, of the 4680 cell. And that progress is coming. So I think on the 4680 side, we have sufficient cells for everything that they make that uses 4680 right now. Good progress.
Is that we also expect to ramp orders from our suppliers.
Yep.
So this is not about replacing our suppliers, it's about supplementing our suppliers.
Yes.
So we are very appreciative of our suppliers. Panasonic obviously is our longest supplier. They're an amazing company. CATL, got LG, and BYD.
So here's the problem with that. Ramping supply of cells from suppliers for what? If you're not increasing vehicle production meaningfully, well, then there's not a need for a lot more cells. If the Cybertruck is using the 4680 that you're producing, then there's no additional cells for that from Panasonic or BYD or LG. So if you're going from 1.85 million vehicles in 2023 to 2.1, 2.2 million vehicles, and 100,000 of those are Cybertrucks, and then you're deploying some more Megapacks, you're not really ramping. And the Megapack is probably using just cells from CATL. Then you're not really getting a lot more cells from these suppliers until you ramp growth in some meaningful way. What do they need? What do you need the cells for? So I don't see that. Again, maybe I'm missing something. Maybe there's something there I'm not seeing. I'm struggling with that one.
The next question is from Adam. Should retail shareholders be concerned that Elon has stated that he's uncomfortable expanding AI and robotics at Tesla if he doesn't have 25% of voting?
So this is kind of it's a question that didn't get the answer that I would have been looking for, which is Elon leaving the company? Right? Elon is basically saying if he doesn't get what he wants, he's not comfortable staying at Tesla developing AI products. And he doesn't really answer that question. And I don't think we learn a lot from this answer.
I see a path to creating an artificial intelligence and robotics juggernaut of truly immense capability and power. And my concern would be, I don't want to control it, but if I have so little influence over the company at that stage, that I could sort of be voted out by some sort of random shareholder advisory firm. We've had a lot of challenges with institutional shareholder services, ISS, I call them ISIS. and Glass Lewis, which there's a lot of activists that basically infiltrate those organizations and have, strange ideas about what should be done. So, so I want to have enough to be influential. Like if we could do a dual class stock, that would be ideal. I'm not looking for additional economics. I just want to be an effective steward of very powerful technology. The reason I just sort of roughly picked approximately 25% was that's not so much that I can control the company, even if I go bonkers. If I'm like mad, they can throw me out. But it's enough that I have a strong influence. That's what I'm aiming for, is a strong influence, but not control.
The problem with this question and this answer is we didn't really learn anything. He's already laid all this out on X, on his posts on X. We didn't learn anything new from what just happened. And this relates to when you ask questions, you need to be clear in what you're asking. And the question should have been, based on Elon's comments about wanting 25% share of the company, is there a significant risk that Elon's going to stop working as CEO of Tesla and take Tesla AI talent somewhere else? That would have been a better question. Maybe it would have gotten a better answer. Maybe it wouldn't. Asking questions for Elon to answer is a little bit like prompt engineering ChatGPT. If you don't ask the right question, you don't get the answer you want. But I don't think this answer gave us any new information. Right? I think everything he said here is stuff we've already heard. And really, if you have ultimately 20% of the company, is that sufficient control? He had a nice little joke on institutional share services, calling them ISIS. I do think there's some concerns about activist investors, but the practical reality is that if you deliver an AI juggernaut that makes the company, 10x more valuable, then it's a hell of a lot harder for activist investors to buy significant shares, right? Because the cost of buying the significant shares goes up. So I don't really see that as that much of a concern. I understand Elon's concern, and I think the concern is that, you create the most powerful AGI in the world, and then the woke left mob gets control of it. That's a problem, but I'm not really too worried about that. And I didn't think he sold his case that much here, and he really didn't answer the question that I think most of us want, which is Elon leaving and taking his talents to South Beach along with the other talented people, which is, I think, what the question was going for, but didn't ask well.
The next question is, what is your expectation for automotive gross margin ex regulatory credits for the full year?
Like I said in my opening remarks, we're focused on reducing the cost of our vehicles.
Yeah, just to be clear, this is a short-term question. I don't give a crap about margins, so I'll play out the answer. But, Vaibhav already basically answered the question. We don't know what's going to happen to margins, and I'll let him answer it.
This is a very extensive and involved exercise whereby we look at not just the component cost down to the packaging used to get the materials to the production floor. Each element of the cost is scrutinized to optimize further. A few pennies saved at the subcomponent level, whether through engineering redesign or from many other things which I mentioned, leads to cost reduction. This is a constant exercise, and we just have to chase down every penny possible. We have a strong team which is hyper-focused on this. However, this is a very difficult thing to predict precisely because there are a lot.
We don't know. We don't have a crystal ball, so it's difficult for us to predict this with precision. If the interest rates come down quickly, I think margins will be good, and if they don't come down quickly, they won't be that good. Yeah. It's always important to remember that the vast majority of people buying a car is about the monthly payment. It's not that people don't want. We have tons of. We have lots of people who want to buy a car but simply cannot afford it. As interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. It's pretty straightforward.
So Vaibhav was talking about, we're trying to cut costs so we can increase margins, and Elon's like, yeah, but that's small beans. We're not able to cut costs that much anymore. It's really, can we get interest rates down so more people can afford to buy the cars? So we sell more cars. Maybe we sell the cars at a higher profit because we're able to sell the cars at a higher price because the monthly payment goes down even though the price of the car stays flat or goes up. And if interest rates don't go down or the economy's in recession, you're just not going to sell more cars and your margins are going to suffer. It's that simple. And the macro impact is much greater than the impact of, cost cutting.
The next question is, does the company anticipate 50% volume CAGR to be realized in either 2024 or 2025?
As we've said in our prior guidance, there will be periods where we won't be growing at the same rate as before. We are between two major growth waves. The first one began with the global expansion of Model 3 and Y. And we believe the next one will be initiated with the next generation platform. In 2024, our volume growth will be lower, as we have said, because we're trying to focus the team on the launch of the next generation vehicle.
CAGR is cumulative average growth in revenue, I think. And so if FSD takes off in that window, if Robotaxi, happens in that window, then you're going to see a massive jump in revenue. But as far as vehicle production, we just heard we're not going to see the vehicle production of the next generation vehicle, which is the next wave, really take off until 2026 at the earliest, and maybe not till 2027. So we're going to see flat growth in vehicle production and vehicle deliveries until 2026 or 2027. There'll be some limited growth, but not a lot. We'll see a little bit more growth if the macro gets better. It'll be less if we had a recession or macro gets worse. But that's where we are. So, and I think the person who asked the question before we had these other answers. So I don't think it's right to be impatient with the question. That questioner didn't know that these other questions would have been answered before, because that was a question that was submitted, a couple weeks ago.
The next question is from Michael. When will Tesla start construction on the Giga Nevada expansion and Giga Mexico? And when can we expect each of these to produce their first products, such as 4680 cells, semi, and the next gen vehicles?
We have recently broken ground for the next phase of Giga Nevada expansion to incorporate semi and other projects. But as said earlier, as regarding Mexico, we want to first demonstrate success with the next generation platform in Austin before we start construction. Therefore, we have started the long lead work to get the basics ready and plan to follow our recipe from the 3Y ramp with Shanghai, where we started with learnings from Fremont and ramped really quickly.
Yeah, exactly. It's important to emphasize that, Model 3 production was 3 years of hell. Honestly, before some of the really worst years of my life, frankly. I still have mental scar tissue from those 3 years, as do many. But then Model Y was, somewhat of a variant on Model 3, so a much easier situation. And then we were able to actually do slightly improved versions of, in some cases, significantly improved versions of the Model Y production line in Shanghai and Berlin. And that's the right. I think the sensible way to go about things is figure out the core technology of the manufacturing line, and then replicate it with improvements throughout the world.
You hear the path. The path is we're going to get the manufacturing down in Texas. Once we have the manufacturing down in Texas, then we're going to look at expanding in Mexico and expanding elsewhere. And again, if you're not going to start manufacturing until late 2025, and maybe that's Elon optimism, and you're not really going to start manufacturing until early 2026 or mid 2026, you're not going to start manufacturing in Mexico or China or Berlin until 2027. So the growth, this large growth wave is really delayed a lot more than I thought. I can't emphasize that enough. What we've learned in this call is there is growth coming on the vehicle front. It's a ways off. Now, when I talk about the growth coming from Robotaxi and Bot, it seems like it's becoming increasingly more likely that if Robotaxi and Bot are going to happen, they're going to actually happen before we see the wave of growth in the next gen vehicle. If I'm right, if I understand things correctly.
Next question from Michael is, has there been any progress made with an FSD licensing agreement with another company?
I really think lots of car companies should be asking for FSD licenses, but and we've had some tentative conversations, but I think they don't believe it's real quite yet. I think that will become obvious probably this year. And I do want to emphasize that if I were CEO of another car company, I would definitely be calling Tesla and asking to license Tesla full self-driving technology.
I think the key thing there was, this is Elon optimism, but I think it will be obvious this year. That was the most bold statement Elon made, that FSD is going to cross the threshold this year. But, and that's the thing, like when you're talking about CAGR, if you're going to deliver Robotaxi, if you're going to deliver full self-driving legit, then CAGR is driven by the software value, not by the vehicles produced. So I'm a little fuzzy on how they're interpreting the value generation, the revenue generation, the profit generation. Once you actually deliver FSD, that's a massive spike to revenue, and the vehicle production becomes secondary. And now the interest in manufacturing at scale becomes a lot higher because the demand for your vehicles becomes a lot higher because the cars drive themselves, and that's massively valuable. So I'm a little fuzzy on how that's all working out.
The next question from Siddharth. What is the timeline for Optimus' first production of a volume production line, and what are the barriers to getting there?
This was a really good question, and we actually get a pretty significant answer here.
Optimus obviously is a very new product, an extremely revolutionary product, and something that I think has the potential to far exceed the value of everything else at Tesla combined. And when you think of an economy is productivity per capita times capita. But what if there's no limit to capita? There's no limit to the economy. The AI technologies which built for the car translate quite well to a humanoid robot, because the car is just a robot on four wheels. Tesla is arguably already the biggest robot maker in the world. It's just a four-wheeled robot. Optimus is a robot with a humanoid robot with arms and legs. It's by far the most sophisticated humanoid robot that's being developed anywhere in the world. I think we've got a good chance of shipping some number of Optimus units next year.
What? So if I heard that correctly, there's basically no chance of shipping next generation vehicle next year, but there's a good chance of shipping Optimus, presumably shipping Optimus to customers next year. So Optimus delivers to customers before the next generation vehicle. So again, the growth wave in Tesla revenue, if Optimus becomes useful and valuable, and potentially more valuable than everything else the company does, which I agree with, then the growth wave starts at the very beginning of the growth wave starts in 2025 with Optimus. Now, is Elon being over optimistic about Optimus? Probably. But I thought that was the biggest positive moment of the earnings call, if you're thinking long term, is that Optimus may deliver to customers in 2025. Who are the customers? Is it factories? Is it manufacturers? Is it my fantasy bot beta program? I don't know. But that is a big deal.
A brand new product, a lot of uncertainty. Is that when there's a lot of uncertainty and you're in uncharted territory, it's obviously impossible to make a precise prediction. But we will be updating the public with progress on Optimus every few months. And you can see that it's advancing very quickly. I was just in the Optimus lab, actually, until late last night. I think until like midnight or something. And finally left the Optimus lab. The team's doing amazing work. That's obviously a case where we want to make sure that Optimus is safe, especially at scale, and that it should be impossible for any centralized control to upload malware to a humanoid robot. We're going to want to build in localized shuttle that cannot be updated from a central server. That's a case where we really have to give extreme thought to safety. But like I said, I do think it has the potential to be the most valuable product of any kind ever, by far.
Just to comment on the barrier, I think the barrier, and we've talked about this, is like getting it to actually do something useful. Like we can get it to walk around, we can get it to do things, but it's like that utility part.
You can already do some useful things.
But
yeah.
To making millions of these things, it's like utility. Got to get the utility out.
Okay, so I love when you get back and forth between Drew and Elon, and that was like one of the most lively back and forths we had between Drew and Elon. Drew saying it's not really doing much useful yet, and Elon saying, well, it is doing useful things, and Drew saying, well, not useful things that we can make millions of them yet. It's like, well, yeah, Drew, but we're in the beginning of 2023, and Elon's talking about, or we're in the beginning of 2024, and Elon's talking about shipping units in 2025. That's a lot of time to build in useful skills. So number one, the pessimist thinks they're shipping millions of them. Okay. Drew, the pessimist, thinks they're shipping millions of them in 2025 or 2026. Again, the growth wave for Tesla, the next growth wave is not the next generation vehicle. It's not vehicles at all. The growth wave for Tesla coming in 2025 or 2026 is Optimus. I thought that was a really, and like Elon saying, well, it does do useful things. And Drew's like, well, yeah, it does, but not useful things. We can sell millions of them. Boy, that sounds like we're making a lot of progress. That sounds like there's a lot of potential there for Optimus to be an absolute game changer. Again, this is the most optimistic thing in this earnings call. If you're looking out to even the medium term future, not even 2030, if you're looking at 2026, all of a sudden Optimus becomes a material game changer for the company. You know, even Drew, the pessimist, is kind of like, yeah, we're going to make millions of them. Like, I think that's the first time, you know, Elon has talked about it. That's the first time somebody other than Elon has talked about millions of Optimus. Whenever the team is talking about something, that adds more weight than when Elon just pulls something out of his ass. I love Elon, but, you know, sometimes Elon says shit and the team's not on board. The team's not on board. Now, Drew, the pessimist on the team, is saying millions. It's coming.
A smart robot that can do that's capable of doing generalized tasks is what it will be. And in terms of doing, you know, moderately specialized tasks, well, it can already do that, and it'll just get better through the course of the year. As we improve the technology in the car, we improve the technology in Optimus at the same time.
So it's already capable of doing moderately specialized tasks. And they're working towards making it capable of doing generalized tasks. So moderately specialized tasks, we can have it do this simple thing like fold clothes, which they're, you know, they folded clothes. It wasn't really the AI doing it, but the machinery was able to do it. We don't know what moderately specialized task is able to do yet. It's able to do something. As it expands in its ability to do a broader variety of things, it becomes more and more valuable to customers. Who are the customers they're targeting? That question wasn't asked. I would love that question to be asked at some point. Are you targeting commercial customers? Are you targeting, you know, private individual customers? Who are the customers for this thing? Where do you see this going? They probably have a vision for it. That part hasn't been, that's actually one of the disputes. Like I say, you know, there's a lot of rich people who would love to have a bot walking around, right? I don't think I'm crazy to say that. There's a lot of rich people in that. Yeah, I think you could sell 1 million units to idiots like me who would pay $25,000 for a bot. Well, that's $25 billion in revenue. If you sell 1 million bots, $25,000 a pop in the early days when it's not really capable of very much. Elon, please do the bot beta program. Drew, please do the bot beta program.
I mean, we're really building the future. The Optimus Lab looks like the set of Westworld. But admittedly, that was not a super utopian situation.
Yeah, not the best reference. We're not entering Westworld anytime soon.
Right. Well, you know, and take safety very, very seriously.
The next question from Nermin is, how many Cybertruck orders are in the queue, and when do you anticipate to be able to fulfill existing orders?
I don't think this is a very important question, and I don't think they really answer the how many Cybertruck orders are in the queue. It's not an important question for the long-term future of Tesla because Cybertruck is going to be a relatively small volume vehicle in a world of 20 million vehicles in the fantasy future. Maybe they make 1 million Cybertrucks a year, so it's only 5%. With revenue higher, maybe it's 10%. But then you have bot and FSD generating so much more revenue that Cybertruck just isn't that important for the long term. It's a fun vehicle. I'm excited. I want one, but from a long-term investor perspective, I don't think that's that big of a deal. But let's go forward with the answer.
First of all, I want to thank all the Cybertruck reservation holders for their patience. The reservation to order conversion rate so far has been very, very encouraging. If the trend continues, that's very likely to be, we will soon sort out all the builds in 2024. And also, you know, we have new orders come in after order numbers keep growing. So we're now all hands on deck, focused on ramping, so we can, you know, fulfill all the demands in a reduced wait time.
So there, I wasn't clear. Like, are you going to settle all the orders in 2024? That doesn't seem likely. If there's 2 million orders and you're going to make like 50,000 Cybertrucks this year, that doesn't seem likely. So I was a little puzzled by that one. Like, what orders are you going to fill? Maybe I think they're going to fill Foundation Series orders in 2024. I didn't process that the way others might have.
Emphasize that this is very much a production constrained situation, not a demand constrained situation. And we, obviously, we could dramatically raise the price, but that doesn't feel right to us to sort of gouge people for for early delivery. But really, the demand is off the hook. As long as the price is affordable, I mean, I see us ultimately delivering on the order of something like 250,000 Cybertrucks a year in North America.
So again, 250,000 Cybertrucks a year to a company that's hoping to deliver 20 million vehicles, that's, barely over 1% of vehicle deliveries. It's just not we're excited about it. It looks cool. It's exciting, but it's not really material to the company's future. And even Elon was asked a question about Cybertruck, and he said it's not material to the company's future. So it's a nice vehicle. It's fun. I think it helps branding, but it's not going to be a high volume vehicle. I have hope that it's actually going to be 1 million units a year, but that's way down the road if we're ever going to get there.
All right, thank you. The next question is, can we get Tesla energy volumes reported in the production and delivery release?
On the second day after the end of a quarter, so like Q4 ends January 2nd or so, usually Tesla reports, this is how many vehicles we produced, this is how many vehicles we delivered. And the question is, when will Tesla start reporting energy storage or or solar deployed, energy storage deployed numbers at the beginning of the quarter, like you do with vehicles? And Drew says we will.
Yeah, we will strive to do so starting from this quarter. And just a brief update from the business perspective. Megapack continues to see strong demand signals globally, driving consistent growth trajectory through 24 and 25. We want to thank all of our partners who've put their trust in the Megapack team to execute on critical infrastructure around the world. And I would like to personally thank the Megapack engineering and production teams for their strong 2023 execution. Lathrop continues to ramp through 2024 with the operation of a second final assembly line to double capacity from 20 to 40 gigawatt hours by the end of the year.
Okay, so we're going from 20 to 40 gigawatt hours of production by the end of the year. So the run rate by the end of the year is 40 gigawatt hours. So the potential to deliver 30 gigawatt hours this year seems kind of small. Unless Powerwall suddenly has a big jump, we're not going to see doubling of energy storage deployed this year. Maybe we'll see 60% growth, 75% growth. I don't think we're seeing 100 to 150% growth year on year for 2024 versus 2023. And there was no mention of the Shanghai Megafactory. There's a factory that's being built in China to build Megapacks. He didn't mention it at all. So when will that factory be ready and up and running? Maybe they don't expect to actually produce Megapacks in any meaningful volume in 2024, so it didn't need an answer this year. I'm still hopeful, given how fast things go in Shanghai, that they will actually start manufacturing Megapacks and selling them, but the volume probably will not be significant in 2024.
What are the preliminary results on return on investment of your ads and education campaign? Given that many people still lack awareness that Tesla average price is less than the average non-luxury car price of $45,000, will you expand educational ads?
So we get a half-decent answer here. We already got a little bit of this earlier in the call, I think from Vibe Hub towards the beginning. But, we get a little bit more color here, a little bit more information.
As Elon mentioned, the ultimate solution to increase EV adoption is really address the affordability issue. But at the same time, we do aware there's an awareness issue as well. So in Q4, we ran a series of digital campaigns, very targeted digital campaigns across different geos and different channels. The target of these tests is really just to drive awareness and ultimately measure the return of investment on those digital channels. The messaging we're driving is really focused on our product and also try to address some of the misconception of the EV, such as safety, affordability. One particular awareness campaign we run in Texas, we reached the audience about 10 million unique viewers and generated close to 500,000 visits to our website.
So we reached an audience of 10 million and it generated 500,000 visits to our website. So 5%, that's a really good number. 5% of the audience clicked through and went to the website. 10 million unique viewers, 5 million visits to now was it 5 million unique visits, or were some of those visits 500,000 unique visits? So that's 5%. So that's it sounds like they're saying this was a pretty good campaign. They're learning from that campaign. They may do more with that campaign. They may try to replicate that campaign or try to do something similar. That gives you some sense of they're making some progress in figuring out how they can use digital marketing. But, did that 500,000 users, how many of them bought vehicles? The visits of the half million users, how many of them bought vehicles? Was it a meaningful impact compared to the cost of reaching 10 million unique users? That he didn't really address. I think the way he described it, this was a positive result. It also sounds like maybe the other campaigns were not positive results. But I think that was helpful information, and there's more coming here.
A large number of these viewers are first-time visitors to our site. The traffic through these digital channels actually behaved very similar to those organic traffic come to our website. Going forward, we're just going to keep exploring different channels and doing our trials to get a better understanding of this effectiveness of this digital campaigns.
So it sounds like that wasn't so effective that, okay, we've got to do a lot more of this. It was like, okay, this was a good learning. We learned something from this. We're still trying other things to see what's the most effective way to reach people, bring them to our website. And then their behavior that was similar to organic traffic suggests that they're buying as much cars as the organic traffic, but he didn't indicate whether the revenue generated, the return on investment, was sufficient to justify the cost of the advertising. So, they chose an area of advertising that is generally considered the easiest to measure, easiest to quantify, and often considered very effective. And if you're getting 5% of people to click through to your website on an ad, that's actually really good. So my experience with advertising, that's a pretty good result. But since he didn't say, well, that generated, positive return on investment, and it probably didn't, or it was close, it's not clear.
But I would also like to caution that we'll be very careful that we don't want to overspend on this side. We want to make sure people are aware, but that's where we'll keep tweaking our methodology about how and where we spend the money, because we understand the importance of increasing awareness, but at the same token, we don't want to spend a lot of money on just creating awareness.
Because you spend a lot of money creating awareness, but they don't buy the cars, then you haven't done anything, right? You want to be efficient. It's not just a question of raising awareness. It's, are you generating business for the company? Are you generating sufficient revenue to justify the cost of the advertising? Probably not.
Yeah, there are some geographies where our market share is remarkably low, like Japan, for example. Now, we obviously need to make sure that we have superchargers in the right locations, and the service centers are there, and the product works well in Japan. But Japan is the third largest car market in the world, of any country. We should at least have a market share proportionate to, say, other non-Japanese car makers like Mercedes or BMW, which we do not currently have. So I think that's the case. And when I talk to friends of mine in Japan, they're like, there is quite a lack of awareness of Tesla. So that's the case where we definitely need to increase awareness.
So I want to respond to this particular point because I lived in Japan for the last 3 months. I agree that there's a lack of awareness of Tesla in Japan, but I think it's more than about awareness. What are the other things that Mercedes and BMW do in Japan? They have really nice quality sales and service teams in really important locations, and you got to do a lot. The Japanese market is characterized by people who have a relationship with their dealership. And when they're buying a car, they go back to the dealership they bought the car from before. They like to have local dealerships. Toyota has dealerships everywhere. So it's a huge challenge. And I don't think it's as simple as just raising awareness because, okay, I'm aware of Tesla, but my dealer doesn't sell that. I don't have a local dealership. Where are the customers? I think there's a whole bunch of hurdles to selling Teslas in Japan. Also, is Japan still the third largest car market, or has India surpassed it? I think for practical purposes for Tesla, Japan is the third largest car market, but I think it's a lot more than just raising awareness. And there was an ad campaign in Haneda Airport, and they've done some other things. It is a real challenge to build that awareness in Japan for a variety of reasons. And it sounds like they're going to make a push, and that their market penetration is really low. They just don't sell a lot of cars in Japan, so I'm hopeful they make some progress there. But I think it's a whole lot more than just awareness. You need great dealerships or sales centers. You need great service. You've got to satisfy the customers because they are driven by relationships. You need people there who are going to build relationships with the customer and maintain those relationships and deliver on their expectations in those relationships. That's the nature of Japanese culture. I'm not saying I know it better than Elon, but I did live there for a total of 15 months of my life, and I don't think Elon's lived in Japan, and I'm glad Elon has friends in Japan, so do I. I might actually have more friends in Japan who know more about this than Elon. It's hard to believe because Elon knows a lot of people in Japan. But, I'm not going to go with the smarter than Elon disease thing. It's just like, I'm not sure he fully gets it. I'm not sure the team fully gets it. I'm not sure how important it is as a market compared to, say, Southeast Asia, where Tesla is growing. But they should be doing better there.
My question would be, on like the cost reduction, you've talked about it already a lot. If I look at it over the last 5-6 quarters on average, the COGS per car has been coming down more than 2% sequentially on average. So that means you're on a trajectory of COGS per car going down 10% a year. So that's probably unheard of in the auto industry. I don't think any car manufacturer ever achieved that. But that's very, very mundane and it's a good performance, but it's a very normal performance in a lot of other manufacturing industry like microelectronics or consumer electronics. And so I'd love to hear your thoughts about whether you consider yourself closer to the latter, to a microelectronics business where you have this ability to actually always improve costs, you have more control on how things are pulled together into your fabs, and you see yourself sustainably taking costs down with that kind of pace, or do you think your ability to take down costs is actually going to become more in line with the rest in the industry over time?
Yeah, I think I've covered this in a pretty lengthy detail, even in my opening remarks and in a previous question. But to just further clarify, we are constantly looking for what we can do to reduce costs. And like I said, it's a game of pennies. We've talked about it before as well. And the team is constantly going and checking where can we reduce the cost further. And do I believe that we will have the same pace which you've seen over the past few years? Probably not, because remember, we were coming out with a period wherein commodity prices were rising. So then we did see benefits coming from that. So those are more or less, taken care of. But there is more which we're still chasing. And, I would say a big kudos goes to the team out here at Tesla, both the engineering team as well as the supply chain team, because every time we give them a challenge, they go gangbusters to try and figure out whatever they can to take out further cost. But yes, I would want to caution that do not project the previous cost reduction at the same pace completely in the future, because with our current platform, we are getting to a place wherein, there are limitations.
I would just add to that cost of goods sold also declined because we were shifting from higher cost S and X as a proportion of vehicles sold to lower cost 3 and Y. So the cost of goods sold of vehicles, when you go from selling an $80,000 car to a $40,000 car, your cost of goods sold is going to fall substantially. Now that Model 3 and Y are dominating and Model S and X are relatively small shares of cost of goods sold, you sort of hit that floor, and now it's just sort of, you're sort of asymptoting. I think the way, from a mathematics perspective, you've kind of hit an asymptote around $36,000 a car that it's hard to get below that. Can they get somewhat below it? Yeah. Model Y being more expensive than Model 3, and there's still some S's and X's out there driving up cost of goods sold, but it's going to be hard to drive cost of goods sold down much from there.
The increased scale also sort of helps us there. As we introduce new products, we have the opportunity to go renegotiate existing suppliers for better pricing. We're looking at every penny, like Vaibhav and Elon mentioned. Just to give you an example, our inbound logistics cost has come down by 22% year over year. And this is because of optimization on using returnable packaging as opposed to cardboard, which is even better for the environment. Optimizing trucking routes, negotiating better pricing with shipping companies, with trucking companies, going with full truckloads, and just doing that sort of. The bigger we become, the more we put thought into these things, and the more efficient we become as a result of it. So those work streams are going to continue.
And we are also getting into the tiers of supply chain to see if there are opportunities.
Yeah.
Getting into the tier 2s, tier 3, tier 4 levels, and then negotiate those pricing as well. to get more efficiency out of the system.
And then on the design side, we're not static, right? Like, especially in areas where the technology is still improving rapidly. Power electronics is a great example. We continue to bring improvements there that are like fundamentals, sort of driven from the device up, that result in cost reductions generation over generation, and they don't only go into the new vehicles; they come to the old vehicles as well. So that's closer to what you were talking about with like the microelectronics space. Some of that exists in the vehicle.
Yeah, certainly our car is more computer than car in many ways, and has a lot of new tech over the last 100 years of automotive production that everyone trying to scrape pennies from.
We have a crazy amount of compute in our cars compared to anyone else.
Yeah.
It's like orders of magnitude.
And we get to ride that down, right?
Maybe 1,000 times more? I don't know, some nutty number.
I mean, like if I just look at the main microcontroller that makes the motor go, for example, like when I think about what it costs when we stuck it in a Roadster in 2006, and what it costs now, it's like there's no comparison.
Yeah.
So we've definitely been riding that electronics cost wave.
Yeah. And then even on the like what you call traditional vehicle side, we do things that no other automakers do to bring costs down through breaking down, the way structures are built and the way we put our cars together. And I think that mindset that we have is very much closer to the micro processor or power electronics industry than the automotive industry.
You mentioned this like phase in which you are between two big growth periods. I'd love to hear you about what you consider the size of your addressable market with the portfolio you have today, like the 3, the Y, the X, and the S. What's your estimate of your addressable market? You're shipping like probably about like a 2 million unit run rate today. And given the price points of these cars, what kind of market share of what you address with these cars do you think you've already achieved today?
I don't know if I actually don't think we have a firm idea of this. It's hard to say exactly.
Yeah, I won't say one way to think about it is look at the automotive industry as well. EVs still contribute a very small market share. So yes, our goal is to try and take as much market share out of that pie. But do I have a specific number to give you? I don't think we can say that with certainty.
And it's a growing pie as well.
Exactly.
It's 9% today, but it could be 20% in a couple of years or in the future.
Yeah.
And certainly, like the way we've looked at it, and we've always said this, it's not about how many EVs can we sell, it's how many great cars you can sell, how many vehicles you can sell. And that market's, 100 million a year. And, we're barely 2% of that. I still think there's 98% more to get.
That's the big, bold one. I think that was Lars saying, well, if there's 100 million cars sold a year, then our total addressable market's 100 million. As bold, there's a lot of vehicles that Tesla's not making at that price point. I think the question was about within the 3Y, S, and X range, maybe Cybertruck. So, you're not addressing the small, very small cars. You're not addressing the under $15,000 cars that are a big chunk of world sales. And I don't think there's really 100 million units sold a year. I think it's more like 65 to 75 million. But still, go Lars.
Yeah, it's worth noting that if you look at, say, the average selling price of the other top-selling vehicles in the world, they are much lower priced than a Model Y.
Yeah.
So like a Toyota RAV4 or Corolla, Honda Civic, that kind of thing, they're much lower priced than ours. So people are really stretching their wallets to be able to afford a Tesla. It's quite a difficult thing for them to do, and remarkable that it's the best-selling car in unit volume, despite being much more expensive than other high-volume cars.
Comes from Adam Jonas from Morgan Stanley.
Your last AI day, Elon, was September 2022. Can we expect a Tesla AI day this year? It seems like a lot's changed in that realm, and is this year the time?
We have found that when we do these AI days, some of our competitors literally look at what we do on a frame-by-frame basis.
They do.
And then we find these things being copied.
Same thing with Battery Day.
Same thing with Battery Day.
Yeah.
So we have to be a little cautious about, revealing the exact recipe of the secret sauce. I think some kind of update would be good to do. I'll talk it over with the team, and I think we might do something later this year.
So those of us who are big-time Tesla fans love having AI Day, Battery Day, Autonomy Day, any kind of day where Tesla makes a presentation about some of the things that they're doing inside the company. As a long-term investor, I find it helpful for understanding what they're doing to achieve the goals they've set out for the long term. It's also a benefit to the company in terms of recruiting. I can see where there's some sort of concerns about competitors getting inside knowledge about what Tesla's doing. It doesn't seem like competitors are really following what Tesla's doing or catching up. They did Battery Day however long ago with 4680, and as far as I know, there's no other vehicle manufacturer that's even thinking about using a 4680 cell. So I'm not sure what they got out of Battery Day. For fans, we love this stuff. We eat this stuff up. Does it generate value for the company? Does it cause some sort of competitive issues? I don't know. I personally want to see it because for the entertainment value and for the educational value as a long-term investor. And because I just love the company and I love interacting with it and experiencing that stuff. But it's not. Is it really material to the long-term value of the company for them to do these events? Probably not. The only big advantage, I think, is when they do an event like this, and it does help with recruiting, and I believe it does help with recruiting, and that matters because talent helps.
Our main goal with these AI Day things is recruiting. So
Yes.
and to sort of change the perception of Tesla as people thinking of Tesla as a car company when they should be thinking of Tesla as an AI robotics company.
Maybe as a follow-up, Elon, I'd love your thoughts on the topic of China-based OEMs expanding into Western markets as the China market kind of gets saturated and there's a tremendous growth in the supply. How much success should Tesla investors allow for this competition to achieve in Western markets? And can you envision a scenario where Tesla could partner with a Chinese OEM to help accelerate sustainable transport in markets like Europe and the United States?
Our observation is generally that the Chinese car companies are the most competitive car companies in the world. I think they will have significant success outside of China, depending on what kind of tariffs or trade barriers are established. Frankly, I think if there are not trade barriers established, they will pretty much demolish most other car companies in the world.
This is a really important point. There's this ongoing theme, and I probably carried this theme, that Tesla is effectively going to bankrupt legacy auto. It's not Tesla alone. People are talking about, BYD is competing with Tesla. BYD is not competing with Tesla. BYD is partnered with Tesla. BYD sells batteries to Tesla. If BYD thought Tesla was a competitor to BYD, would BYD sell Tesla batteries? No. BYD and Tesla and the other EV companies are competing together to displace legacy auto and fossil fuel cars, internal combustion engine cars. And if BYD is producing in high volume, if Chinese automakers produce in high volume and they enter the home markets of European automakers, American automakers, Japanese automakers, and they sell cars competitively in those markets, that cuts into the number of sales of these legacy automakers and it accelerates their extinction. For some reason, people think these companies are competing with Tesla. If 90% of the world's cars or 95% of the world's cars that are sold are gas cars, an EV that's not as good as a Tesla, but better than an internal combustion engine car, displaces an internal combustion engine car. If Tesla is not as good as a BYD, but it's better than an internal combustion engine car, they both sell. And the internal combustion engine cars are the ones that lose out. So this is something that is frequently missed out by people. I think it was even missed in this earnings call at one point. There was this reference to, EV market share. And it's like, no, there's a total vehicle market share. I think Loris Moravi had it correctly. It's like there's 100 million cars out there. That's 100 million addressable market. It's not the EV share is the addressable market. It's the entire market of cars. So, watch out for the Chinese automakers. Like I'm sitting here in Thailand and I'm seeing them. They're BYDs, there's Aura, Good Cat, there's a Chinese automaker, Great Wall, that is now manufacturing or assembling vehicles in Thailand. They're growing, and they hit Europe, if they hit Japan, if they hit America, and they start displacing American sales, they're not making pickup trucks. I don't think they're making that many large SUVs, but if they start taking out the economy cars first, look what happened when the Japanese hit America in the 1970s. I actually just had this conversation with a Thai Society of Automotive Engineers event. I just made that point. The EV revolution is a new wave similar to how the Japanese disrupted the American car market. The EV wave is coming. The Chinese are leading the way along with Tesla. And stop looking at the Chinese as the enemy of Tesla. Chinese car makers and Tesla are going after legacy auto with a passion, and they're, unless the governments go out of their way to stop electric vehicles from displacing internal combustion engine vehicles, which shows they don't really care about the environment if that's what they do, then you can see what the result is. They're much more concerned with protecting jobs, which is really the special interests that control the car companies, than they are about the environment and the consumer and climate change and all the other stuff they claim to care about. But we'll see.
We don't see an obvious opportunity to partner. Certainly we're happy to, except on the supercharger front, we're obviously happy to give any electric car company access to our supercharger network. We're also happy to license full self-driving, perhaps license other technologies, and anything that could be helpful in advancing the sustainable energy revolution.
And the next question comes from Dan Levi from Barclays.
First, I'm wondering if you can just walk through some of the gating factors required to unlock your next-gen platform. You talked about a number of cost initiatives back at the Investor Day a year ago, things in manufacturing and powertrain. Maybe you can just give us a sense of where these initiatives stand. And do you believe it? We know that there's a number of new features and technologies in Cybertruck, things like 48-volt architecture, really employing your 4680 batteries. To what extent do you think Cybertruck is really a proving ground for the next-gen platform and is really going to be a gating factor to unlocking the cost reductions needed for the next-gen platform?
I thought this was a pretty good question, and I thought the answer kind of caught me. It's a good answer. Kind of caught me off guard, but good answer.
Yeah, I don't think that anything on Cybertruck should be considered gating for the next gen platform. We're obviously doing a lot of manufacturing innovation, as Elon said, for a next generation vehicle. When you do something at that scale, you have to prove it out. You don't just throw it on the line and just build it. So we're going through those validation phases for all of those new manufacturing technologies now. Sure, 48 volt was definitely something we wanted to carry forward, and it's something we hope the industry adopts as well. We're also open to partnering on that if everyone wants to do that.
Finally, man, but people that really know that this is like the inside baseball thing, but it's so high time that the auto industry moved from the random number of 12 to 48.
Random number of 48.
Yeah, well, it's much less random.
Slightly less random based on human injury, but
dramatically reduces the amount of copper you need in the vehicle, and and also moving to a sort of higher bandwidth communications, sort of Ethernet level communications as opposed to CAN bus, which is pretty slow. So it's really just bringing cars to
the 21st century.
Yeah, pretty much.
So like certainly like
it's not exactly, it's like normal for a laptop.
Yeah. Certainly bringing that is an evolution in our architectures of vehicles, but it's not gating by any means. The gating work is just to finish the design and manufacturing of the car, test them out, and get them going.
Yeah, programs in execution mode, right?
Yep.
Right. So it's talking about like tooling lead time, manufacturing
factory
equipment
lead time,
factory lead time, and executing those programs.
There's a lot of specialized machines that make the machine.
Yep.
For a next-gen vehicle. So these are not machines you can just order from anyone.
Mm-hmm.
You have to design a machine that has never existed to build a car in a way that has never existed.
So you don't just have like a design validation phase, but you have an equipment design validation phase as well.
It makes it very hard to copy us because you have to copy the machine that makes the machine that makes the machine.
So, talk about tiers.
It's not, it's like, exactly, manufacturing exception. So I do think it's quite a powerful sustainable advantage because there just is no place to go to order the machines that make our next gen car that don't exist.
So I thought that was a really powerful and deep answer, and I'm not even going to claim that I understood it all, but there's a lot of complexity in building the next generation vehicle. You're not only designing the vehicle, you're designing the machines that make the vehicle, and you're designing the machines that make the machines that make the vehicle, or you're designing the machine that designs and makes the machine that makes the vehicle. And it's not constrained by results with Cybertruck. It's a different vehicle. They are using 48-volt architecture. They are using the Ethernet data transfer. But what they're doing is radically different, and this is going to be a radically different manufacturing process, and we're going to have to wait and see what that is. But there's a lot in here.
Your release does not mention Dojo, so if you could just provide us an update on where Dojo stands and at what point you expect Dojo to be a resource in improving FSD, or do you think that you now have sufficient supply of NVIDIA GPUs needed for the training of the system?
So first of all, great question, and you never have enough compute.
I mean, the AI hardware question that is a deep one. We're obviously hedging our bets here with significant orders of NVIDIA GPUs, or GPUs are the wrong word. There really needs to be, there's no, it doesn't, you can't produce graphics. So it's not a graphic processing unit, neural net processing unit or something like that. Yeah, GPU is a funny word, vestigial. A lot of our progress in self-driving is training limited. Something that's important with training, it's much like a human. The more effort you put into training, the less effort you need in inference. So just like a person, if you train in a subject, it's sort of classic 10,000 hours, the less mental effort it takes to do something. If you remember when you first started to drive, how much of your mental capacity it took to drive, you have to be focused completely on driving. Then after you've been driving for many years, it only takes a little bit of your mind to drive, and you can think about other things and still drive safely. The more training you do, the more efficient it is at the inference level. So we do need a lot of training, and we're pursuing the dual path of NVIDIA and Dojo. Think of Dojo as a long shot. It's a long shot worth taking because the payoff is potentially very high, but it's not something that is a high probability. It's not like a sure thing. High risk, high payoff program. Dojo is working, and it is doing training jobs. So, and we're scaling it up, and we have plans for Dojo 1.5, Dojo 2, Dojo 3, and whatnot. It's got potential. I can't emphasize enough. High risk, high payoff.
Tesla has been buying NVIDIA neural net processing units, H100s, A100s. They announced the Dojo program a while ago. They've been working on Dojo. Apparently, they have plans to continue working on Dojo for a long time because they not only have Dojo version 1, they're already working on Dojo 1.5, Dojo 2, and Dojo 3 are in line. Tesla needs computing power to train their models for FSD, for Optimus. NVIDIA already provides a chip set, a hardware set that works. Tesla thinks that in the future, they may need their own, either because they can't get an adequate supply from NVIDIA or because they're actually able to make something that costs them less and delivers more. There's been particular talk about delivering compute per kilowatt hour. So the efficiency of computing power in terms of the energy consumed or some other kinds of efficiencies in computing power. So, Elon describing it as high risk, it sounds like, they haven't so far demonstrated to Elon that this is clearly better than the NVIDIA chips that they can buy. With that said, there's still, it hasn't been demonstrated that it's not better. And you never know if there's going to be a shortage of NVIDIA chips or some other problem and you need computing power, and they're able to, generate computing power by building their own chips and building their own architecture. My impression when they presented Dojo was it sounded pretty compelling, but there's a lot of inside baseball. There's a lot of really understanding that kind of market that's over my head. I think Dojo is important. I think it's a great insurance policy against some sort of, let's say China invades Taiwan and TSMC gets shut down and NVIDIA stops producing chips or something like that. Be nice to have your own supply of chips. That's assuming that Dojo isn't made in Taiwan. We don't know where the Dojo chips are made. So, what's the plan there? What's the rationale for it? But I think the expectation is that the Dojo version 1 chip and 1.5 chip probably are specifically designed to be focused on FSD and bot. And then the version 2 chips may have some broader application. The version 3 chips may have some broader applications after that. But, the primary focus is, like maybe Dojo is going to be useful for XAI as well as for Tesla. We'll see where that goes. I'd love to know more about Dojo. I don't think we're going to learn more about Dojo anytime soon.
It's a very interesting program. it has the potential for something special. There's also our Inference hardware in the car. So we're now on what's called hardware 4, but it's actually version 2 of the Tesla designed AI Inference chip, and we're about to complete design of. The terminology is a bit confusing. We're about to complete design of hardware 5, which is actually version 3 of the Tesla design chip, because the version 1 was Mobileye, version 2 was NVIDIA, and then version 3 was Tesla. And we're making gigantic improvements from hardware 3 to 4 to 5. I mean, there's a potentially interesting play.
This gets really interesting. But before we get into that, just to note, hardware 5 is coming. My guess would be that hardware 5 is being timed to run in the next generation vehicle, and maybe hardware 5 is being timed to run in Optimus when Optimus scales. That, and their reason, probably because it's going to be super efficient on energy consumption while delivering really high computing power. That's my guess, that you want more efficiency in your compute to be able to not use too much energy in something that doesn't have a lot of kilowatt hours. The bot doesn't have a lot of kilowatt hours of battery pack, so you don't want to use too much electricity, too much energy for it. But this is where it gets really interesting.
When cars are not in use in the future, that the in-car computer can do generalized AI tasks, can run a sort of, GPT-4 or 3 or something like that. If you've got tens of millions of vehicles out there, even in a robotaxi scenario where they're in heavy use, maybe they're used 50 out of 168 hours. That still leaves, well over 100 hours time available of compute hours.
So if I understand that correctly, and I think I do, it's probably not GPT, it's probably Grok. Like Tesla's cars will have Grok, which is Tesla's competitor, not yet a competitor, but hopefully soon a genuine competitor to ChatGPT. So if Tesla has Grok running on the cars, and you're able to talk while you're using the car, you're able to talk to the car, Grok's able to give you answers. There's some value in having Grok as the interactive AI that you're dealing with in the car. But when the car is not operating, it basically serves as a cloud computer answering other people's questions, and maybe serving XAI with its larger questions about trying to understand the universe. Who knows? If you have 5-10 million cars with this computing power, and I hate to disagree with Elon. I think 50 hours a week for a robotaxi. Like, why wouldn't a robotaxi run from 6 a.m. to midnight? That's 18 hours a day times 7 days a week. You're probably using 100 hours a week, but still, that's not like, you'd still have 60 hours a week or so available to offer this computer service, right? So it's still valuable. I don't buy that robotaxi is only going to run 50 hours a week. That's not much more than a human driver would do. I would think the robotaxi is going to run 100 hours a week. That's a little quibble there, but the value of the inference compute in the cars when the cars are not driving, being used to provide inference compute, which is essentially like some sort of cloud computing service, providing some sort of service like ChatGPT provides now, maybe through Grok and maybe other services that are hard to imagine now. And how much value does that generate? That could generate a lot of value. And does the car owner get a piece of that? Why not do a revenue share with the car owner? Makes sense to me. We'll see.
It's possible with the right architectural decisions that Tesla may in the future have more compute than everyone else combined.
I just want to be clear here, inference compute and training compute. So Dojo and the NVIDIA clusters are training compute. The cars go out and experience the world. The inference chips in the cars see the data coming in, the light coming in through the cameras, the photons coming through the cameras. They process it and they make decisions based on the training they receive from the training compute. And that gives the output of steer left, steer right, accelerate, brake, etc. What ChatGPT does is there's this big training computer that trains some sort of inference compute. When somebody asks a question, text comes in, it reads that and gives output based on its training. So there's no reason why the chips in the cars couldn't offer that service if they are all, in addition to being trained to drive a car, they're trained to answer chat-based questions or they're trained to answer other topics or address, other prompts, whatever it is. And I doubt that, I don't know how many chips OpenAI has devoted to the inference side of compute. We know that Meta just ordered like 350,000 H100 chips from NVIDIA, right? So they're building a massive training compute cluster. But how many inference chips do they have providing whatever service they're seeking to provide? Elon thinks that that Tesla's going to have more than anybody else, and I don't know the answer. I don't know how much these other companies devote to creating inference chips. Do they even have specialized inference chips? I'm not clear on that detail. But there's an interesting game to be played.
And the next question comes from Colin Langham from Wells Fargo.
As we're thinking about going into 2024, the press release talks about hitting 36,000 or slightly above in Q4. And the comments of the release talk about approaching the natural limits, and it sounds like you're continuing to try to whittle that away, but that sort of implies there's not much left. In addition, you have the hourly wage increase, I guess, we'll add to that into next year. And I thought you said raw material costs are that benefit is sort of almost played out. So is there an opportunity to continue to go below the 36, or should we kind of be modeling that it kind of stays at this level into 24?
So the 36 he's referring to is the $36,000 approximate cost of goods sold, the average cost of a car that Tesla sells. Can you significantly drive down the number of the cost of goods sold on the cars? I think that's the question. And you've already benefited from the decline in cost of raw materials. You've got an increasing labor cost rate. They're paying workers more. Can you keep driving cost of goods sold down with those headwinds? It's a good question.
We are definitely aware of the cost increases which are coming through because of the wage increases. But like I said, we keep looking at other cost opportunities and try and figure out where else can we cut down. So there is definitely more opportunity to bring down costs further. I won't specifically guide to a number which we will try and get to, but there's definitely more opportunity there.
Yeah, we're chasing lots of cost opportunities on the design side still for 2024. North of 8 figures is what we're worth of, just in my organization, and Lars has got a bunch. And then from a commodities perspective, it's such a long cycle time through the whole material supply chain that even with what we've already seen to this point, there's more to come on commodities reductions.
And there's still some tailwind left on the commodity.
That's what I mean, yeah.
And aluminum and steel.
Yeah. And battery materials.
It boggles my mind to think that if we make a 1% improvement in cost, that's $1 billion.
Yeah.
Yeah.
So it's like, on average, if we reduce the cost by 1 penny, $1 billion. What? And we started off, wasn't that long ago, that we're only making like 10 cars a week. Where does it lead ultimately? With good execution, like I said, it's not a slam dunk, but with, if we execute very well, I think Tesla could be the most valuable company in the world.
So Elon went off on a little bit of a tangent there, but it sounds like they do think that there's various ways that they can pursue additional cost reductions. I think early in the call they were a little hesitant on how much they can reduce costs, and Drew and Lars are chipping in, and supply chain is chipping in. We think we can still squeeze some costs out here. Also, I think this issue of the labor costs, I don't think that labor is that large a share of Tesla's costs. I think that Tesla tends to be more automated than other car makers, and so the costs of labor for Tesla on a per car basis might be less than other cars. They may have more automation. They may produce, and their productivity per employee may be higher. So you increase the wages of an employee, it may have a little bit less impact on the cost. They didn't mention that, but I think that may be true. I think we're done with the earnings call, so I just wanted to cover that. Let's take a quick look through the slide deck and see what we can see in that. And by the way, my focus here is on what's the long-term stuff here. So there's not a lot of long-term stuff here. Model Y became the best-selling vehicle in the world. We knew that. Energy deployment, storage deployment of 14.7 gigawatt hours in 2023, 125% growth. It seems apparent that growth is going to drop below 100%, but we'll see. Rolled out FSD version 12 of FSD beta, trained on a fleet of over 1 million vehicles. I thought it was 5 million vehicles, so I'm a little puzzled about that. New era on the path to full autonomy. Focused on bringing the next generation platform to market as quickly as we can with the plan to start production in Giga Texas. The platform will revolutionize how vehicles are manufactured. So There's a lot of talk within Tesla about how big of a deal the next generation vehicle is going to be. But, we'll see when they actually deliver the next generation vehicle, when we actually learn more about it. We don't know that much about it yet. So here's the Q4 numbers. You can see total auto revenue was here, 21.5 billion. That is maybe a record. I'm not sure if it's a record, but it's more than Q4 of 2022, and it's more of Q2 of 2023. Energy generation and storage revenue is down. Total revenue, 25.167 million, certainly the highest of the last 5 quarters. Total gross profit is down compared to Q4 of 2022. That's probably driven by interest rates, lowering, causing them to lower prices to be able to sell cars. Total GAAP gross margin, I think auto gross margin was up, but total GAAP gross margin is down. Operating expenses down on the previous quarter. That's nice. Income from operations up on the previous quarter, and operating margin up on the previous quarter, but still lower than the 3 quarters before that. And again, this is short-term stuff, not terribly important. Free cash flow, this is a big number, 2 billion, and they're now a $29 billion cash pile compared to 26 billion the previous quarter. And you look on a year-on-year basis, $29 billion cash pile versus $22 billion cash pile the year before. So Tesla's cash pile has grown. Very exciting to see that. Total. And now when they said that 1% is $1 billion, well, revenue is 82 billion. Cost is something less than that. So, all right, 1% is really like, 600 million or 700 million. It's not a billion, but still, when they're, cutting costs, that's something. Earnings per share is here. Like, again, to me, this is short-term stuff. I don't pay attention to it. But 2023 earnings per share, $4.30 is above the $3.62 of the previous year. It's, you go back years, Tesla's earnings per share is killing it. And, look at automotive revenue at 82 billion versus 4 years ago, automotive revenue, 20 billion, right? Total revenue, 96 billion versus total revenue, 25 billion. So Tesla's killing it in terms of growth compared to the past. That, compared to the previous year, the growth isn't as much, but, over the course of years, the growth is great. When do they get to higher growth? I don't know the answer to that. Free cash flow this year was 4.3 billion versus a higher number the 2 previous years. But again, that cash pile is just huge. It's nice to see that big cash pile. That's, if there's a recession, if there's significant economic headwinds, it's good that Tesla is ready for that. Yeah, I don't see a lot here. These are like short-term, there are various factors that affected short-term numbers, not terribly important to me. I think we knew total production was about 495,000. Total deliveries about 485,000. We already knew that. Storage deployed, again, this is a dip from the previous 3 quarters. Not happy to see that. We do see Tesla locations, mobile service fleet growing, supercharger connectors growing, supercharger stations growing. All that's good news. That, provides the infrastructure for the, growth of the company. When you add more superchargers, you add more locations, you add more service fleet, all of that makes it easier to deliver quality service and supercharging to your customers. And you go to the year, Tesla did 1.85 million vehicles produced. That's a big jump on 1.37 million the previous year. Deliveries over 1.8 million versus 1.3 million the previous year. And again, you look back and you see how well you're doing compared to the past. And it's 38% growth in deliveries year on year. That's not bad. It's not 50%, but it's not bad. The revenue growth is less, which CAGR is revenue. It's not deliveries. But yeah. And then there's this chart that I love to look at, the current installed annual vehicle capacity. I don't think there's a change here from the previous quarter. And, I don't see a whole lot of, again, looking long term, I don't see a whole lot mattering here. Talking about AI, in Q4, we released the latest FSD Beta 12 software to customers, utilize in training. Again, I don't think there's anything there's nothing new here in this. Cybertruck, we already know all the details about Cybertruck. I don't think there's anything new here. Cost of goods sold declined to slightly above 36,000. As we approach the natural limit of cost down of existing vehicle lineup, our team continues to focus on further cost reductions across all points of production. So they are approaching sort of an asymptote, but they're not there yet, and they think they can squeeze a little bit more cost out. And that if they can get more cost out, then if the same sales price, margin goes up, profit goes up. Still, to me, and you can lower prices and be able to sell more cars because more people can afford your cars. It goes both ways. Expect to ramp our 40 gigawatt hour factory in Lathrop toward full capacity. Drew said that on the earnings call that they expect to be there at the end of 2024. No mention of Megafactory Shanghai. No mention of any other manufacturing of energy storage. Solar affected by interest rates. No mention of growth in solar. So, where's the long-term growth there? I'm not seeing it. Services, to me, not terribly important for the value, general value of the company. It helps to get a little bit of money there, but that's just not like the game-changing stuff that I think we need. So this is the part about growth. Our company is currently between two major growth waves. The first began with global expansion of Model 3Y platform. And the next one we believe initiated by the global expansion of the next generation vehicle platform. Now, this is where, the next generation vehicle platform, the way they've been talking about it, is not happening until 2026, really. That's a big delay. And it sounds like Tesla bought Optimus might happen in 2025. So the next growth wave might be Optimus. I think there's three different growth waves coming. There's the self-driving growth wave, which if you get to Robotaxi and you start delivering Robotaxi rides instead of vehicles or in addition to vehicles, you're generating massive revenue and massive profit from that. If you start delivering bot, you're delivering massive revenue and massive profit from that. And if you scale the next generation vehicle and you scale energy storage, then you get a lot of growth from that. So I'm surprised at the way they write this, that they're pinning it all on the next generation vehicle. I think there's a lot more to it. I think there's a lot of there's the Megapack growth story. There's the Powerwall and solar growth story. If interest rates come down, there's a lot of different avenues for growth. There's a Dojo growth story. There's AI services story. That there's a lot of different stories in here that we're not catching all of it. We expect our hardware-related profits to be accompanied by an acceleration of AI software and fleet-based profits in the future. So Cybertruck will ramp. So I just don't see a lot here. We'll go through these charts. Not a lot of information here. And then I think we get to some financial charts that I'm not going to bother diving into. I think we've got a decent picture of the future for Tesla. My take on this is that, the battery revenue model approach that I had been following is on a substantial pause. And I don't know that I believe that the next generation vehicle and Megapack and Powerwall, et cetera, the vehicle, I don't know that they're going to achieve the goals we've talked about in the past. So the battery revenue model is struggling. As I said before, the Robotaxi model, if they can deliver full self-driving, Elon said, Elon says it, it might be ready this year. The full self-driving might cross the threshold this year. We never know when it's going to cross the threshold. Whenever FSD crosses that threshold and they head to a full self-driving world, sales of FSD go up because all of a sudden it's genuinely useful. And then you head into a Robotaxi world where the revenue creation just goes off the charts. The revenue and profits go off the charts. Same thing with Tesla bot, Optimus. If Optimus starts becoming useful enough that they can manufacture in the scale of millions, in Drew Baglino's words, and how far off is that? Is that next year? Is that 2 years? That wave of growth is insane. And the Robotaxi and the bot are that insane value growth. The 10x's, 20x's, 50x's the stock. The battery revenue model, 5x the stock. And if we don't get the battery revenue model, but we get one of the other two, even one of the other two, the stocks go through the roof and everything's wonderful for those of us who've invested and believe in Tesla long term. I will say, as much positive as Elon says about NVIDIA, I'm not investing in NVIDIA, but I would certainly understand. I haven't looked into it enough to decide. I don't want to sell Tesla stock to buy anything, but investing in NVIDIA might be a good move for some people. I'm still a firm believer in Tesla delivering this Robotaxi future, this Optimus future, and 10x, 20x, 50x growth. So that's what I think about it. Please let me know what you think in the comments below if you're on YouTube, or in the replies if you're on the X platform. Thank you so much for watching. Check out the t-shirts at elonbits.com. Thank you to my supporters on Patreon, on YouTube channel members, Twitter, X subscribers, Patreon. Please support me on any of those platforms. Greatly appreciated. Thank you so much for watching.